Let's turn to Bob Iaccino of LotusBrokerage.com and Joe Trevisani is Chief Market Analyst at FX Solutions. I want to talk silver just for a second. I mean, there are risks in things that run up a lot, aren't there, Bob? And who was the last guy to buy it?
Well, it wasn't me. I haven't been involved in silver in a while. The run-up in silver just started to look nuts, and it was one of those things where silver became the cheap gold. People who had missed out on the gold. Gold is now an investable commodity. It's something that people are using for 10, 15% of their long-term portfolios. They don't mind holding it. Silver became what everybody started jumping into when they said gold is too expensive, I can't get in there. And by raising the margin requirements, it was the right thing to do given where silver's price was. The exiting of silver was bound to happen. It was a short-term trade from the start, at least from the start of the most recent just psycho rally that we had in that metal.
It's affecting gold too. I mean, that's part of the same thing. But one went up, one went up 100%, and the other one went up 25%.
While you were on vacation, and I think it was in the FT, one of the major papers had a huge ad about how silver is really the place to be and the place to invest. And we were holding up the ad showing that with these silver coins that they were minting, trying to push average investors, retail investors into this stuff.
Really, right at the top.
That was the week you were gone, right?
Yeah. Joe, it's related to currency, isn't it, or is it?
It is. You've got, there's a lot of froth right now, I think, and that's what you're seeing come off in the commodity markets. But for the dollar, it's been an alternative. And it's been so much an investment that people can move to because they can't get return anywhere else. Related to Mr. Trichet, what he's going to have to do today is cut a very fine line. And in a funny way, he can probably do his anti-inflation cause more good by being slightly dovish today. Because if you do that, you've seen the indication from the commodity markets. They're coming off. The one thing that really hasn't come off yet has been the euro with a strengthening dollar. So if he is a little weaker on inflation, you might very well get a correction in the euro, which is what I sort of expect. And that will help his inflation cause because it'll take commodities yet down another peg because the dollar has been one of the weak dollar been one of the things that's been driving them.
Yeah, I would think that at this point that a strong euro is starting to not be that positively received over there.
I think they would all be very happy in Europe to have the euro down to 46 or 45 against the dollar without any problem whatsoever. And he really can do that because there hasn't been much of a correction in the euro. It's been a very long, strong run up in the euro. We've seen corrections in all the other markets. Is the euro going to sit there by itself and not correct? I don't think so. So I think he's going to try and push that today, but he has to be delicate about it. I think we'll probably look for the language that would indicate a hike probably in July or later. But he doesn't want to be too easy on it. It's going to be interesting.
Joe, the short the dollar trade is almost as popular among the hedge funds and the momentum traders as was long gold and long silver. So how do you look at this way overcrowded short the dollar trade? A number of people say there's fundamental reasons behind it, but is it something that you're paying attention to for a sharp and violent snapback possibly?
I would say so, yes. I mean, all of those markets are showing the kind of froth. As Becky said, if you look and they're advertising for retail investors to get involved in things which are not usually retail commodities, then you know that's one of the indications, one of the classic indications of being at the end of a run in any particular item. And I would say that's absolutely the same thing for the dollar. Yes, everybody's short the dollar. well, at some point when everybody's short the dollar or everybody's long gold, people have to take their profits. And that's enough of a reason here to get a 3-4% correction. So that's sort of what I'm looking for here.
If Trichet does exactly what you said and indicates that it's going to be July or later before we see a rate hike, could that be the factor that makes this market turn around?
I think it will be, because the market is partially market's partially indicating that you're going to get many more rate hikes here. We don't know exactly what the timing is going to be, but that's what's baked into the euro 149. When he withdraws that certainty about the timing, certainly that'll be enough. I mean, these markets
are off.
Yeah, these markets are there because people are long the euro because they expect to make money trading the euro. That's the basic reason, and that's something which comes off very easily. As you've seen the moves in silver, have you seen the moves in gold and oil and all the others? They're all having exactly the same pattern. So that's what I expect.
Hey, Bob, what happens if we do get a 5 to 10% move higher in the dollar? What's going to happen to the S&P?
Well, it's kind of funny because the S&P, the overall recovery to me has been a problem. Obviously, the QE2 has been the easy money flow, and the weak dollar has been driving these earnings. And earnings, I think, have been kind of mixed. In this particular, we're kind of in the middle rounds of the earnings season. They've been kind of mixed. I think the S&P takes a little bit of a hit. But I do like the U.S. over the long term, even with the ending of QE2. I think the Fed is going to be a lot less vigilant and a lot less aggressive in raising the near zero rates. It's not going to happen the way it's happening in the EU, in my opinion. I don't think you're going to get this anticipation of words like vigilance and stress on inflation. And I couldn't agree more about the opinion on the euro of your other guests, because if Trichet misses even a little bit on that, they're going to be taking profits. We don't buy low and sell high here. We buy high and we sell higher, and then we wait for other people to form that base. So I think the S&P does take a hit if that happens, but it needs a 10% correction. When it does, I'll be in with both hands buying it.
Yeah, because that's what I was wondering, whether, because all these assets have been rising, presumably on the Fed, and what you wonder whether equity markets. Looks like something was starting yesterday, but it didn't really pan out, Bob. Wasn't that bad after it was all said and done?
You are still seeing buyers of dips in the S&P. And I said when I was on the show last week that I wasn't going to be buying dips as easily as I had been in the past. And I was right for precisely one day, which wasn't the best outcome. But in terms of getting in there again and holding, well, for one day, it's pretty good. Usually it's about 30 seconds, 40 seconds. At least I'm right through the length of these interviews. But for me, it was an issue where I want to see more than just people coming in and buying. The European investors, the Asian investors are not excited about the U.S. stock market, given the dollar weakness as they were before. The volumes still aren't there. I need this correction before I come in for the medium term.
All right, gentlemen, thank you. Bob, Joe, thanks for coming in today.
Thank you.
We appreciate it. All right, thanks.